$600 billion is what Lehman Brothers held in assets when they crashed and took the economy with them. 2,800 billion, so that's 2.8 trillion, is what Credit Suisse and Deutsche Bank control in assets under management. That's 4.6 times more. So almost $3 trillion of assets are owned by these two banks in Europe and globally. Credit Suisse is at a critical moment now, says the CEO, and that is a crazy thing for them to come out and say. What lies in store for the world? You can see here the CDS, so credit default swaps, are going parabolic, same as 2008 on Credit Suisse. Now, just to recap, credit default swaps are insurance on the default risk of the bank. So smart money, or people really think that this bank has a high degree of probability that they are going to default. And this might be as well other banks. They might own a fair amount of exposure to Credit Suisse or Deutsche Bank. They might be trying to hedge what they own before they can offload it. They might be hedging by taking out a credit default swap on these banks as well. So that's kind of the thinking that is in here. And the problem with them having $3 trillion under management is they are what I've learned is a systemic, a critically important systemic bank. So Credit Suisse and Deutsche Bank both hold those titles, which means that they have tentacles everywhere, or investors have tentacles everywhere. If they go under, again, they're too big to fail. And I say that in quotation marks because people said that about Lehman and the other banks that went under in the United States before the massive bailout. That essentially, when they say too big to fail, it means the governments they have to come in and bail them out if they go under, because people lose pension funds, savings, and the contagion risk. If they go under, then boom, 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 boom,